I guess we all have to be careful in this new digital world so you don't give up all of your wealth. But to our first conversation now, in today's roller coaster markets where inflation, geopolitical tensions, and economic uncertainty, tariffs dominate headlines, how can investors stay calm and make smart decisions? See, Warren Buffett's timeless principles offer, some kind of roadmap. It says focus on long-term value, ignore short-term noise, and bet on quality. But how do these strategies hold up in 2025's volatile landscape, and what can everyday investors learn from the Oracle of Omaha when fear is running high? Joining me now is Dr. Ifeanyi Uba, as a head investment research, commercial partners. Joining me via Zoom. Great to have you on the show.
Thank you for having me. It's always a pleasure.
Fantastic. So definitely we know Buffett's number one rule, never lose money. It sounds obvious, but how do you actually apply this, in shaky markets? And, in the case of Nigeria now, when you get incredible offers, that tell you they're going to double your money in a short time, and you end up losing that money you're trying to double. How do you avoid all of this, or do you just avoid risk, at this point?
Well, you can't avoid risk if you want to make return. But if there's one thing we need to learn from Buffett, patience and time he used in selecting the right choice. Buffett right now is leaving a 364 billion, about that question mark for his next successor, because according to him, he doesn't like holding cash, but he doesn't see the right investment. He's not just going to throw cash at any investment. He has a saying, if you only had 20 stocks or 20 decisions to make for the rest of your life, you'll be very rich. So in this day of noise, crypto, CX, and amazing return, what people can see to learn from Warren Buffett is streamlining their decision-making skills to just a few things that you are very sure about. And value investing takes the change, because Warren Buffett's strategy is to find a company that is undervalued and has long-term growth potential, and throw as much money as it can on it and hold it for as long as it can. That strategy has made him grow his funds over 5,500%, and we are talking about 37,000 times more than the S&P 500. Looking at a compounding interest of 20%, that is amazing. And we are not talking about crypto. This is somebody that is a seasoned investor that takes his time to pick the right stock.
It's quite incredible. You mentioned crypto. We know, I think he's referred to crypto as, rat poison. I think it was him, or was it Charlie Munger? But he doesn't like crypto. And is that a sign, for investors at this point? Is it, showing that there's really no value in crypto?
Not necessarily. Warren Buffett just says he doesn't understand. And he doesn't stick to further himself trying to understand what he feels he cannot understand. So streamlining yourself to what you understand. If you understand crypto and you can understand what it means for it to be intrinsically undervalued when it comes to the network, usability, use cases, then you're making the right decision. But if you're entering crypto just because you heard your friend make 300% and you want to put it to make 200%, you're having the wrong notion. We're talking about intrinsic value and long-term use cases. The cryptocurrency has shown that it has different use cases, and it's still expanding. You see so many use cases, from healthcare to transport, even in fine arts. That's why the NFT craze was all about. And even in gaming, the new GTA release is supposed to have a crypto payment platform. So you could see people game and earn money. So if you're looking at investing in crypto or a cryptocurrency that will facilitate that kind of network, maybe you are on the right track in picking a crypto that has intrinsic value and long-term use case. So it's all about understanding the metrics around whatever you're investing. It's not telling you not to invest, but understand what you invest.
And talking about, not investing, we know, Berkshire Hathaway, they're sitting on a pile of cash right now. What would you say is his playbook, for waiting out uncertainty, when should you, put that cash in, or, when do you just hold? Because we know holding that's something, at this point.
Yeah, so I think keeping the cash shows that he still sees some trouble ahead. And given the global tensions and the way commodity prices are trending upwards, particularly gold, he's not off the mark at all. We are seeing accelerated tensions from China and the US, but not just China and the US. We are still seeing crackdown in fundamental agreements from India and Pakistan, and which could also accelerate to something bigger. The Middle East is still having some trouble, and the hegemony of the United States is becoming to have a question mark. How long will the United States become the super dominant power? And what will it cost for a replacement? So there are so many dynamics, and him holding the cash is just showing that the worst has not yet hit.
All right, so we know he also said, at some point that if you cannot invest in an asset class, if you cannot hold it for 10 years, then you shouldn't, touch it. How would you say a discerning investor, would know an asset class that they can actually hold, for 10 years?
Okay, so like it's all about understanding the markets, like understanding what you're buying. So let me talk about a business that's not listed in the stock market right now that has huge potential, even if it comes in the stock market. It's not a business I use, which is iFitness, right? So understanding the fitness business and how iFitness has taken the market share in Nigeria. If iFitness comes into the stock market, Nigeria stock market right now, and continues its expansion plan post Nigeria, post Africa, the 10 years outlook on a business that has solid fundamentals, good real estate, huge financing could be huge. It's not as if I'm looking at their books and just making inferences, right? Mere guesses, but this is the kind of manner, this is the kind of tunes you should be looking at. Are you going to be willing to use it in the next 10 years? I think he gave an example of a chewing gum, or like a gum factory, right? So he doesn't really care about the type of gum. He just cares that this gum company produces enough to control the market and they will still be available in the next 10 years. And regardless of the technology, regardless of AI, regardless of anything, will people keep on chewing gum? That's the same question we ask ourselves. People keep on using the business after 10 years. So if you can find, it's not so many businesses that are like that, but if you can find a treasure trove like that, you should keep it and not sell it for anything.
Yeah, definitely. Not easy, at this time. Sometimes you see an asset class and you're not just patient enough, to hold it, that long. 10 years is definitely a long time, but I guess I understand, where he's coming from. But let's pivot to gold now. Yeah, we're seeing, it did touch about $3,500 per ounce. We've seen a pullback to about $3,300. Do you think gold has peaked, or do you see a 3-5 retest coming?
Well, to be honest, with the global tension, 4,000 is a reality within this year or early next year if the tensions continue, right? Because we still see that people are start looking for alternatives to US dollar. And the most talked about alternative that is not yet in place is which currency, which is supposed to be backed by gold. And we have noticed that from the data from central banks all across the world, they have accelerated their purchase of gold. And this is not going to stop. So if the tension continues to increase, I do not see any bearish sentiment for gold.
Right. So, definitely we know gold thrives on, uncertainty. From what you're seeing so far, do you think uncertainty will stay with us throughout 2025?
There is huge possibility that uncertainty will stay with us throughout 2025, and we could see a breaking point in 2026. We could see a kind of would like to say a turning point moment where it's a make or break moment because the global tensions that are happening right now are reaching a climatic point, and we are seeing first of so many things, right? The Chinese economy has grown massively over years, and they have not entered any war. When last have you seen an economy that has advanced like that for 100 years without a single war? And tensions are cracking up in Taiwan. They are long overdue for a war. So if we see accelerated tensions or breakout of more wars, we could see increased volatility. That's why there's a huge question mark about where to invest, when to invest, and why to invest. The uncertainty is still there and everywhere.
Right, and definitely we've come into some years, when analysts, talk about, the expectations of volatility and uncertainty, in a particular year. But, you find out that a couple of these risk assets, end up hitting new highs, in those years. Do you think 2025 is that kind of year?
Well, it's hard to tell. It's hard to tell when the assets will definitely rebound, but they would definitely rebound, right? So if there's one thing to know as a wise investor is to buy when there's blood on the street. If you can identify stocks that have fundamental values and can accelerate when the market is in an upward trend, you're going to see huge return, particularly now that we see prices as a discount.
And also, all eyes on the U.S. Fed. We're supposed to get that decision tomorrow. I'm guessing, are you seeing any chance, of a cut? Some say, the U.S. Fed chair is not ready to play to the tune of the White House, at this point. He's going to cut when he's ready to cut. What are you seeing?
Well, last I checked, the CME was to there was a 3% chance for the cut, and I think if we check today, the probably might have tricked it down to a 1% chance. So I don't think because of the inflationary pressure that Donald Trump's tariff war has caused, we might see the Fed hesitate. But yet, the Fed still has to deal with the negative growth rates that was observed during the recent GDP. So it depends on the interpretation of that particular data. On one hand, we could see it as when the data is revised, we could see that the GDP will most likely up and turn positive. On the other hand, we see that the huge chunk of the negative decline in growth rates was because of the net imports, because people are trying to stockpile due to the tariffs. And if it's that, we could see the economy rebound later on and move up. So the Fed might not see any reason to cut it. So it's depending on the interpretation the Fed gives to the data and the long-term outlook. But for now, we most likely think it's going to be a pause.
All right, I guess we'll watch out for that tomorrow to see what the decision will be. But I guess consensus is maybe another hold at this point. Thank you so much, Dr. Ifeanyi Ubah, is the head investment research at Commercial Partners. Thank you for coming on today.
Thanks for having me.